Meanwhile, one of the oldest fights on Wall Street may be coming to an end. Investors are betting that the Trump administration will loosen the government's grip over mortgage giants Freddie Mac and Fannie Mae. Both play a central role in the U.S. housing market by purchasing mortgages from lenders and repackaging them as securities. One of today's countdown closers has a way to play them. Joining us now, Interactive Brokers senior economist Jose Torres and CapWealth Chief Investment Officer Tim Pagliara. Tim, talk to me about how we can cash in on Fannie and Freddie.
Well, we believe the safest way to play this is through the preferred stock of Fannie Mae and Freddie Mac's. For example, FNMAT, they have par value of $25 a share. Upon exiting conservatorship, they should start paying dividends again. And it's a great upside potential from here. You know, the government stands to monetize close to $200 billion that could be used for a variety of initiatives to improve the logjam in housing, improve the amount of housing that's available, especially in the workforce, which is, you know, critically short right now.
Jose, sort of broaden out this with me. When we think about the intersection of the economy, the markets, and policy in a new government, how should I be thinking about Santa Claus rally, you know, markets next year with all of the tailwinds of a new administration at the forefront?
Well, good afternoon, Taylor. Great to be here. Well, on the one side, you have lower taxation, a lighter regulatory regime, and an onshoring manufacturing push that's going to help a lot of the value, small cap, Dow Jones kind of stocks. But then on the other hand, you have valuations that have extended significantly already, and you do have the threat of higher yields against the backdrop of a less friendly Fed. You know, last week was a shocker.
Yes.
We expected Chair Powell to do more of the same, you know, cheer on the progress, disinflation, all that. Instead, he was much more communicative on the side of cloudiness and uncertainty, and worried that perhaps next year we could have goods prices begin to reinflate.
So quickly, stay invested in the long run, or headwinds make you move out a little bit in the short term?
I think rotating around, going more into value away from mega cap tech, which has run so much and isn't as levered to those domestically oriented policies. I think the value areas are going to start to catch up.
Tim, we only have 20 seconds. Give me your case on Lumen Technologies.
It's an AI play. There's a lot of infrastructure between data centers that have to be built out. Lumen's entered into agreements with Microsoft, AWS. It's a great undervalued company and should do very, very well over the next 12 months.
Short and sweet. Jose Torres.